Okay, good morning, everyone. I think most of you are in Malaysia, apart from myself and my colleague Kelvin. Thank you for joining us today. Okay, and then today we will also have a special guest who will be speaking at the end of our presentation, who will be sharing with you some information on financing. Now, okay, let's start. Give me a minute, let me close my timer. Okay, some of you have spoken to us before, so you know who we are. My name is Jolene. I am originally from Malaysia, currently living in Melbourne. So ALE Property is my company. We started back in 2007 in Kuala Lumpur, and in 2015, I moved to Melbourne and started our office here. So we are a licensed company in both countries, just in case some of you are wondering. And so I had the Melbourne office here. I have been in the real estate industry for almost 25 years. And then Kelvin, who is here today, maybe you can see Kelvin there as well. Just wave your hand, Kelvin. So Kelvin looks after the Perth property market, but he's very active in the Melbourne sector too. So he has been in the Australian real estate market and building industry for about 20 years. So, okay. So for whatever reasons you are here today, I'm sure you're looking for some information or for some answers to some questions about investing in properties in Australia. So our aim here today is to try to help you to get some clarity on your goals and timeline. Of course, to provide you with some information as well too, and to understand how to choose the right property, because even like the fundamentals of investing in real estate is basically the same in all cities across the world, but in every market, it's they have their own characteristics and trends. So today we'll be focusing on Melbourne, which will be delivered by me, and then Kelvin will deliver Perth. Also, we'll share with you what to look out for, what to avoid, and knowing how much it's going to cost you. Most importantly, where to begin and an opportunity to get guided help, like, step-by-step kind of help. Also, you might notice that the topics we are discussing today, it's a bit different from our previous webinars when we talk about the property market, what's doing now, or presenting some projects, so we thought we might do something a bit different. We share with you some tips because a lot of people that we've spoken to, they may apply what they think is correct in their home country or their own city, but it may not work here. So if you are interested to get information like market updates or rules and regulations, please ask us later on for the YouTube links to our previous webinars, or ask us for a one-to-one appointment so we can address specific inquiries that you have. Okay. So today's webinar will be in two parts, I would say, or 1.5 parts, because part one is really brief, very brief. Part two is where the important bits we want to share and why a lot of you sign up for today's webinar. So part one, it's basically a brief introduction, especially to newcomers, people who are just starting to look or may not understand some of the rules and regulations. And then part two, we go into the important bits. Okay. Let's start. So for newcomers who don't know these things yet, there are basically three main things you need to know about investing in Australia as a foreigner. So rule number one, you can only buy a new property. I mean, you can buy multiple. You can only buy new properties. You cannot buy secondhand or what locally we call established homes. Yeah. So whether it's off the plan, under construction, or already completed, as long as the developer hasn't sold it to another buyer, you can buy them. But you can't buy secondhand property. So you might ask, so how do I buy secondhand property, or who can buy? So basically, only an Australian citizen or a permanent resident can buy secondhand established homes. However, I know some of you might have this question. How about, if I have a temporary visa, for example, like a student visa, you can buy, but under the rules, you can buy an established home as with a student visa, for example. However, this property can only be used as your home. You cannot rent it out. You cannot basically treat it as an investment property. There's a lot of limitations, but the cost of acquiring them could actually be a bit more. Like, for example, your FIRB fee could be soon like triple the amount. And again, there's no flexibility. Say for whatever reason, after your student visa has expired and you don't proceed to become a permanent resident or get another visa, you have to sell this home in 6 months' time. You can't keep it, whether you're going to make money or lose money. That's the condition. So we do really prefer our clients to look at new properties, because then there is no such restrictions. You can keep the property, you can rent it out, you can rent part of it out, not an issue. Okay. Second thing that you need to know is every foreigner needs an FIRB approval to buy a residential property in this country. FIRB stands for Foreign Investment Review Board. Just like in Malaysia, we have FIC. So to apply for an approval, there is a fee. The fee starts from 14,100 at the moment for property up to $1 million. So anything that exceeds that, the fees goes up. So thirdly, which is in relation to second thing, some of you may wonder, so, okay, apart from the property, like what are the costs involved, like hidden costs, stamp duty or whatever. So to make it simple, all properties are up to $1 million, depending on which state, it's about 13 to 15% on top of your purchase price. Now, we won't go into the breakdown of this because we have this information. If you like to have it, you can let us know later. Okay. Sorry. Okay. So now we come into the interesting bit. How to choose where and what to buy. This is the crucial part that we want to share with you and to help you understand why sometimes we propose certain properties to you and we may advise differently from other agents. Sometimes you may listen to a friend, jump on the same boat and then realize that you made a costly mistake. So we want to share with you what we know and what we have experienced and what our other clients have experienced before. To make it simple, our team and I, our team actually sat down and we basically summarized this into 2 key processes. Okay. Part 1 is understanding. Part 2 is identifying. Okay. Just remember these 2. So I'll be talking about part 1 and Kelvin will be talking about part 2 later. Okay, part 1. Understanding what? You need to understand your motivation, like what motivates you to be here today? What motivates you to want to buy this investment property or to even consider it? And then what's your desired outcome at the end of the day? What do you want out of it? And after that, you decide, okay, this is what I want to do. So then you need to understand the local property market trends, the location, the demand and supply, and what in each city people are looking for. And then you determine what is important for you to achieve your goals, to do what you want to do. Yeah. So that's understanding. Let's start with motivation. What is your motivating factor in doing this? A lot of our clients basically are motivated by their family. by the children. So some of you are here too. I mean, you can share with us, like if you belong to this category, you can say, yes, that's me too. So family and children, like you want to help your kids, maybe they want to come here to study or they're already here, or even they have finished their studies and they decided they want to continue living in Australia. You want to find them a home to stay in Australia, to help them to save on rent. As you know, rental in across all cities in Australia, it's getting more and more expensive. And by doing so also, you are helping them to invest. Whether you want them to be part of it, to pay part of this, or you want to help them, you're helping them to get into the property market as early as possible. Just like how my parents helped me when I was younger. They didn't help me when I was a teenager, but relatively young. And also you may be thinking about future migration. The other portion of our clients are generally investors looking for opportunities to diversify, to get stable rental income in a growing market, or to find better opportunities than, say, in Malaysia, because most of my clients come from Malaysia. And then there also a lot are thinking about preserving their ringgit, to invest in another currency, just in case something happens to ringgit in a good business environment. So these are the two key, I think, motivating factor. So I'm sure already, as soon as I finish explaining that, you know what motivates yourself, yeah? So once after you know that, so we look at what is your end game here? What is your desired outcome? It's very important that I want to share this because sometimes people along the way, some of our clients along the way of searching for the right property, they may forget about this. So could your desired income be, okay, I want a mid to long-term house in Australia, either for my family, for my children. I'm looking for capital growth. I want the property to grow, whether it's mid-term, long-term, I want to enjoy some equity growth as well, stable passive income, and maybe to expand your portfolio. Now, everyone's desired outcome could be different. Now, we have clients who say, okay, I want to help my children to find a place, and they're hoping the property will grow in price. So I want to look for a specific area. I also have clients who say, Jolene, I understand what you're saying, but I want to be in this location. I don't really care about the rest of the thing. That is not important. I just want my daughter or my son to live in this area because it's going to be convenient for them. That is fine as well. So it all depends on what you're looking for. So remember your motivation and your desired outcome. Write that down as I speak, and then we'll discuss through it. Yeah? Okay. Once you know this, let's jump on into understanding location. This is a thing that I say that sometimes it can be different from one city to another. So I think for this one here, first of all, I want to maybe stress on we have good access to a university, to a school, to good schools, and to work opportunities. Yeah. So if you are a parent looking to buy something for your children, let's say you want your kid who's going to attend, whether it's University of Melbourne or it's Monash, it must have good access to these places. Or if your child is working already, good access to employment hubs. However, you don't have to be next to the university. The reason why I said this is more than often, I think my colleagues here will agree with me. Almost every week or every 2 weeks when we have our sales meeting, right? They'll be like, oh, this person wants to find a place next to the university, like walking 5 minutes. Look, a lot of universities, especially like Melbourne Uni or even Curtin in Perth, around the university, they are student villages, they are student accommodation. So most of the time you can't buy them, you maybe can rent them, but even if you can, why would you want to buy next to a university in a student village? Remember, once your kids finish their university short term, like 3 years, 4 years, even 5 years, right? And they want to join the local workforce, become a young adult, and building their life here, would they still want to live next to university with all students? And then remember, and when you want to sell this property, you like a local buyer may look at it and say, oh, it's maybe a bit too young here, for the students, I may not like it. Yeah. So we just want to help you to understand you don't have to buy something next to a university. You can actually buy something that's good in value, good quality, owner-occupier quality that has good access to these places. Secondly, very important, lifestyle and conveniences. So everyone wants to know, like, I think without me saying, okay, it's very important to be close to amenities, to shops, public transportations, open parks, medical care, cafes, restaurants. We all know that. It could be a bit different in Perth, but in Melbourne, we have this saying that we want to be in a 20-minute suburb. What is a 20-minute suburb? A 20-minute suburb basically just means that within 20 minutes walking distance, you can enjoy all these conveniences. Okay. The next one, it's local residence appeal. What does that mean? Remember what I said just now about student accommodation, for example. So because when you buy this property and one day, whether it's 5 years later or 10 years later, or even 20 years later, you feel like selling this property, you don't want to restrict yourself to one kind of buyers, yeah? And then some more, you cannot sell it to another foreigner. You can only sell it to local people. So buy in a location where there's strong local residents appeal. And local residents, for example, a lot of us do not prefer really super high density area, not super high density buildings. Yeah. So these are some of things. And then lastly, suburb demographic. We want our clients to invest in a safe environment, an area that has a strong owner-occupier presence, people who are buying for their own use. And then also at the same time, an area with a good pool of good tenants. So these are the few things that we would like our client to really consider. And of course, we will go through with you in more details. Okay. Right. Next, another thing that a few more things. Sorry, what you should be paying attention to. So just now I say where local lives, right? And it also includes like new migrants. Like for example, new migrants are coming in. They want to buy a property to live. So you want to have you want a location with local appeal because then your property value will grow better over time. And secondly, this one I'll explain a little bit more. Always come back to your requirements. What do we mean by that? Now, I think just now I mentioned that sometimes when you already plan, okay, you know your motivation, you know what you want to achieve. But along the way, when we're looking at different projects, when we go through with you, you might get distracted and say, oh, my friend said he or she bought in that location. How about that? I mean, it's good to look at the option, but sometimes you may get distracted. You may go here, you may go there. And at the end of the day, it becomes a really stressful process with you. We have come across a lot of cases like this. So we would like to urge you to always come back to your requirements because your requirements may be very different from your friends. So whether it's for own stay or for investment, do not lose track. Another thing that could distract you, which is the next thing on the screen there, is to don't prioritize discounts or incentives. Incentives might sound good. Like we will always try. Let's say if we think we can get some incentives for you from a developer, we will do it. But some incentives may sound too good to be true, and that's just it, too good to be true. So incentives might sound good when you buy, but will the property perform in the long run? There's no harm in asking us, hey, Jolene, How come this developer is offering so much incentives for this project and not for that project? You know, that kind of thing. So in short, all the good projects where that has local appeal, that is located in good location, the developer will say, no, this is what we're selling. We're not giving you any incentives, but you want to buy that because it's a good property. Okay. Okay. I did a case study here just to sort of demonstrate. So this case study, I use two apartment projects. Okay. The first one is a project located in South Melbourne. First of all, let me open up my chat group and see if you guys can type anything here. How many of you have been to Melbourne here? And how many of you have been to South Melbourne Market? Anyone? I think South Melbourne Market is very, very popular among tourists, among Malaysians. Yeah, thank you. Yes, you have been. So I picked the first project that I picked is located in South Melbourne. It's about 15 minutes walk to the market. And this project, it's only has only one tower, 19-story, 170 units. So if you look at the picture here, the CBD is here in the background, and you have the beautiful Royal Botanical Garden here, and then this project is located here. Okay, and then on the other side, you can see the beautiful Albert Park Lake, you know, where Formula One is held every year, and then Port Phillip Bay at the back. And this project is already completed. Now, the other project that I would like to share with you is, I'm sorry, hang on, I lost my cursor. Okay, sorry, let me go back. This project is in the city. I picked this because a lot of people has asked me about CBD projects. There are not a lot of, I mean, there are still some completed projects in the city, but these CBD projects are usually very high density. So this project has 4 towers, 60 stories, almost 3,000 units. Okay. And then we go, okay, now I know I can buy something just outside of the city, or I can buy something in the city, but let's compare. So then we will go through with you that, like based on your requirements, you know, which one may suit you better. For example, this South Melbourne project, I pick a 1-bedroom to compare, right? 1-bedroom, 1-bathroom apartment in the South Melbourne project, 50 square meter, has a balcony, has a little bit of view, you know, it's selling at 535,000 with a 10K incentive. And this project in the city, similar size, high rise, no balcony, slightly higher in price, but we can get you incentive. I mean, I put a 15K here, you might actually get more than that. However, look at the yearly outgoings. Now, what's outgoings? These are the things you need to pay attention to. Outgoings are the yearly maintenance fee. Like in Malaysia, you have maintenance fee, you have council rates, you know, stuff like that. Yearly outgoings for this property is about 3,500 per year. But look at the city one. It's double the amount. So you may not know this thing when you're comparing project, but this is something you have to pay attention to. The yearly rental, if you are going to rent it out, the city one will get more, 100%. Yeah. But after deducting the yearly outgoings, it work out to be similar. Most importantly, after all that, we look at how the market has performed. In South Melbourne, suburb unit price. Unit just means like apartments, yeah, flats. Suburb unit price in the last 12 months has increased 5.6%. And in the city, less than 1%. So when I present this to you, then you'll be able to like, oh, I didn't know this. Okay, that makes it worthwhile to look at the project that's 2 kilometers away from the city. And then you might say, oh, but in the city, maybe my child can walk to school, or you might get you know, better tenant. But remember the yearly outgoings rental, this will work out, the outcome will work out to be similar to this one. Now let's look at traveling to Melbourne Uni, for example, because that's very popular. On public transport, on tram, basically, it takes 25 to 30 minutes for you to reach University of Melbourne. Now, in this area, a new train station is about to complete. They say they will start end of this year or early next year. So it will take you from here to the new train station in front of Melbourne Uni in about maybe 15 minutes. When you are in the city, you think that, oh, walking is quite easy, but you still need 30 minutes to walk to university. And if you don't want to walk, you want to take public transport, still about 20 minutes, plus walking to the station, to the tram stop and all that. So traveling time is actually just maybe 10 minutes more on public transport at the moment from South Melbourne. So this is how we will analyze the project with you when you're choosing a property. Okay. The next thing is to understand demand and supply. Now, we have done this, one for Melbourne and one for Perth recently, just talking about the property market. Again, if you are interested, ask us for the YouTube links to watch it later on yourself. So I will touch a little bit on it, but not in detail. Now, it's important to know that Australia is going through a housing crisis. What is a housing crisis, you might ask? Now, a housing crisis just means that not just in Melbourne, not just in Perth, in every key cities in Australia now, we don't have enough homes. Construction has been very slow in catching up, and the high rental demand have been pushing rent up to all-time high. Since COVID until now, rental has increased over 20%, maybe 25%. Some cities maybe even 30% since COVID. So you might, especially if you have children who are studying here or who have been here or who are trying to rent a property, you will know what I'm talking about, because it's especially in a good area, it's actually quite hard to get a rental property, because for each rental property you have multiple applicants. So at the moment, this housing crisis is presenting an opportunity to foreigners to invest. I will elaborate a little bit about that. Now, while we're having a housing crisis, we have too many people and not enough property. But at the moment, the local borrowing rate is quite high, and everyone who is wanting to buy a property is currently waiting for what? Waiting for the interest rate to stabilize, which it has, or for it to start coming down. Can you imagine, with this number of people ready to buy a property here, to go to the bank and take out a mortgage when the interest rate starts coming down? Everyone will be rushing in to buy properties. It will actually create even more competition at that time. So a lot of foreigners may not be relying on local borrowing. For example, like some people are buying cash, some people can get financing elsewhere, so there is an opportunity here for you to pick a good property right now. And then you might ask me, so what is causing this housing crisis? As I said, there's not enough new stock at the moment. We're not built fast enough. You don't have to take my word for it. This information is out on the internet. So, for example, last year, we had more than 600 people, new migrants, coming into Australia. Take Melbourne, for example. Over, I think, 187, 185,000 people came here. If you have a calculator in front of you or your phone, just take 180,000 divided by 2.5. 2.5 is the average household size here in Australia. How many homes do you need to just house these new people, not taking into consideration our local people? The decreasing household sizes have also created more demand for housing. And then in Victoria, where Melbourne is, last year in around September, our government said, hey, our state needs to build 84,000 homes a year in the next 10 years just to catch up with demand. But last year, we only managed to deliver, I think, about 54,000 homes. We're still behind. And there's no sign of us delivering enough properties. So again, there's the opportunity there. And then, okay, the next point I want to talk about is smaller homes in demand. What does that mean? Like some of you said, but Australians all like to live in big houses with land and all that. Yes, for a long time when properties were affordable and before COVID, before the city grew so much bigger, yes. But as household sizes getting smaller, um, the city grows wider. Families, especially young couples, are choosing smaller apartments. I didn't make this up. Yeah, again, it's a research done in Australia. A lot of people are choosing now 2 to 3 bedrooms type of apartments and townhouses. Not just any apartments, of course, or townhouses, but good quality ones with good floor plans and amenities. Yeah. And they rather choose this type of property over a large home with a garden, but maybe located very far away. That's not so convenient. And that comes to inner city and established suburbs. What is that? Inner city is not CBD, city center. Locally, when we say inner city, it basically refers to suburbs within, say, 2 up to 10 kilometers from the city center. Okay. So inner city suburbs are mostly very, very established because they are quite close to the city. That's where the city started growing, right? It has good schools, public transport, infrastructure, amenities, and everything. The younger generation now, they would rather be in such areas where it's convenient over having a large homes but being very far away. For example, if they had X amount of money, they can either buy a 2-bedroom apartment in a very good area or a big 4-bedroom house but 40 kilometers away. You ask them, you don't even have to ask them to tell you they'll choose the 2 bedrooms straight away. And that is also why things are changing. But all this is more applicable to Melbourne and Sydney, maybe less so for Perth. So that's why we're sharing this information with you. So there's more demand now for convenient location to choose close to amenities over large homes. So this is the current trend now. I mean, Kelvin will cover the tips for Perth later on. Okay. Next slide. There's some misconceptions, again, more applicable to Melbourne. I just want to clarify this because I get this a lot. Since everyone is here, we want to share. Like new buyers or our new clients may say, why don't you just focus on city center? It has higher demand. Now, higher demand for city center, it's right for rental. Rental is strong because a lot of high-paying overseas students are living there. However, if you're looking at capital growth, it may not do as well as some other suburbs because local buyers typically don't look into the city as their first choice. Yeah. So remember that. And then some people say that I heard that the market is oversupplied now. How can Australia be in an oversupply situation when they're going through a housing crisis? Now, what you meant might be there's maybe certain segment of the market, for example, investor type of high density apartment stock, or new estates being in the middle of nowhere. So maybe that's right, because those kind of markets, developers may think that, because it's cheaper there, I'll just keep building on, and then maybe there's not enough local buyers looking to move into that kind of location. So in short, the market is not oversupplied, but again, it comes back to understanding the local market. And then I keep saying about apartment, right? And you may say, hey, but Jolene, apartment has no growth. I heard landed property is better. For a very long time, that is true. Okay, for a very long time in the past, that is true. Houses tend to perform better than apartments. I think maybe when I started almost 20 years ago, yes, at that time, I would say just buy houses. Like a lot of my clients did very well those time buying houses. But again, things are changing. Your buyers are becoming younger. You're getting more migrants from other countries like Asia and all that, who are very much accustomed to living in good quality apartment buildings where it's convenient. So it doesn't mean the apartments have no growth, but again, you look at the type, whether it's built for investors, whether it's built for owner occupiers, whether the quality, the location, the whole concept. So I did the comparison. I'll show you in the next slide. Okay. Now you will see this automated valuation. Basically, CoreLogic, it's a private company that does that records all the property transactions in the country. Yeah, so they have this algorithm. It's not done by a valuer, obviously, it's done by a system. So I pick a project in an area called Colbert that I did before. I saw before. Kelvin, can you unmute yourself? I'm sorry. I can hear my echo. Yeah, okay. So Colbert is located 8 kilometers from the city. It's not that far, like in KL term, maybe from Bangsar South to KLCC. So this project was purchased at 408,000 and completed in year 2022. And the other day, last week, I did an automated valuation. This property, at the moment, estimated at 440,000. It's gone up in price. And my client who bought this, he was an investor. And there's another project in the CBD. This wasn't a sale that I did, but it was something that I found. So this project was purchased at 708,000, also completed in the same year. But look at the estimated value here. Isn't it scary? So I'm here to demonstrate that there are areas where apartments are growing. There are areas that apartments are actually performing better than houses, than landed property in the current market in Melbourne today. Okay, let's move on. Next, this will be the part that Kelvin is going to deliver to you.
Okay, good. All right. Hi, everyone. My name is Kelvin. I've been living in Melbourne for more than 20 years. Used to study in Perth. I went to Curtin University, just for being upfront. So I spent a few years in Perth, made a lot of friends, and I still keep in touch with those friends up to today. So they'll be coming over to visit me in Melbourne because back then, or even now, Melbourne is more exciting, more things to see, more things to do. So everyone seems to be liking Melbourne. However, I visited Melbourne a couple of times in the last few years, except for during COVID lockdown, of course. Perth has become very exciting. So apart from sharing how we're going to help you to identify your wish list, I'm also going to share with you my experiences in Perth. So after gaining an understanding from Jolie, so thank you very much, armed yourself with that. So this is the fun part. This is where you are going to make your wish list. You're comparing location, properties, prices, and also we are able to help you to choose the right property for you, and also things to avoid and what to avoid. So making your wish list. There are only 4 things that you need to keep in mind for. Who are you buying this property for? Is it for your children? Most of our Malaysian clients are for their children, for the family, for yourself, for partial retirement, or for a partial holiday home where you probably will share it with your kids for a little while and visit them every 2 months or 3 months. Most moms that I've been dealing with tell me that whenever they come to Melbourne or Perth, they'll be like the amma or assam or the slave. They'll be cooking, getting groceries, cleaning after the kids. So most moms have been doing that, and I hear a lot of complaints. But however, they do enjoy that aspect, even though it's been quite tired for them. They enjoy doing that for the kids. So that's who the property will be for. And then why? Why are you doing this? Is it for your family to save on rent while the kids are there for like 3 to 5 years or even 7 years? If the children is doing a doctor's degree, I think architecture, you're taking about 5 years. Capital growth, rental yield, currency, and also Australia is a pretty safe haven to park your money or your investment in, for the next 10, 20, 30 years. Then comes to the money side. How can I afford it? Well, we have experienced mortgage brokers, financial planners who can actually provide you with a financial health check to determine how much should your budget be. And then lastly, time frame. Can you do it now? Would you like to wait for a little while longer? And sometimes off the plan property will be able to help you to save up a bit more money come settlement time. And as most of the off the plan properties will take about 1 year to about 2 years to complete, depending on when you actually sign the contract. So that will also save you a bit of time. Or perhaps give you extra time to save some money. Okay, what to avoid? Some clients are very prone to do a lot of research on Google, as we all do. We become our own doctor, we self-medicate, we do a lot of things, we scare ourselves by doing a lot of different things, hacking that on Google that may not give us the context. So sometimes being over research items or properties or news on Google can actually paralyze you in terms of your analysis. So that's what we call analysis paralysis, where you can't move, you're too scared to do anything because you're so overwhelmed by so many different news and reports and articles and PDFs on Google that you really don't know. You'll probably be confused. Rightly so. Number one, you're overwhelmed. Number two, sometimes you are only seeing part of the small picture. There's no one to help you to bring everything together. That's where we're able to assist you. And some clients are really prone to wanting to take property brochures and look at them, study them, but that is only giving you a small portion of what you know about the property. It doesn't give you a lot of context. It gives you all the pretty pictures, which is great. I'm not saying that it's not, but it doesn't allow you to see beyond what's around the brochure. Yeah, so be mindful of that. And also, thirdly, we sometimes find that clients do like to talk to their friends, their aunties or uncles who actually been living in Melbourne or Perth for the last 20, 30 years, which is great. But you got to remember that they have been living there and they perhaps bought the property 10, 20, 30 years ago. And, if they're in Glen Waverley or if they are in Dalkeith, they bought the property for 150,000. And then look at the capital gain right now. Of course, they have the time on their side they purchase early, and hence the property is where they are right now. So just be a bit mindful of that. By all means, talk to your auntie, uncles, and good friends. At the end of the day, Jolene and myself and our team, we do know the market, and we'll give you a bit more context as to why and how and all the details. So these are the three main things to avoid, yeah? So let's do a sample of how we help you to select project by comparing location, properties, and prices. The common requirements for most of the clients that we speak to are actually buying a home for your kids going to Melbourne Uni. I'll touch on Perth a bit later once I do this sample for you, yeah. And timeline usually is about now to 6 months. Sometimes some parents do forward plan a bit longer. They might go, oh, I have 1.5 years, but I'm happy to start my research now. Then the budget usually is sitting around 750,000. Most parents would prefer minimum 2-bedroom, access to public transport. Sometimes they may consider further away from the city or Melbourne Uni and prefer something landed. So we will be comparing inner city apartments and also landed properties. Now with inner city properties, I've picked 3 projects that will be suitable to achieve the goal of being close to Melbourne University. So there's in the north, we've got Essendon. In the city itself, there is a West Side Place right in the heart of the city. And then further down south in the city, there's in South Melbourne. So this project would allow easy access to the city, and also traveling time, it's only 30 minutes. Then we break down into the minute details. For Essendon, from a kilometer point of view, it's only 8 kilometers from the city. For South Melbourne, it's only 2 k's. And the city centre apartments, it's really in the city. However, when you look at the travelling time between Essendon, South Melbourne, and Melbourne, you see that for Essendon, it's only 16 minutes train to the city. For South Melbourne, it's about 25 to 30 minutes. And then even then, within the CBD apartment, you probably need to take about 20 minutes tram to Melbourne Uni. So if you can compare the three projects, the traveling time is roughly about the same. However, the prices are not the same. So the Essendon project for a 2-bedroom, you're looking at 661,000. And for the South Melbourne, you're looking at 745. And for the city one, it's 760. So definitely there is a difference, but the traveling time is still within 30 minutes. They're all good in terms of close amenities to shops and shopping and cafes and all that, and also close to employment hubs, and they're all properties. So because of that, at the end of the day, you have to go back to your understanding, your motivation, and also ask yourself what's more important for you. That if the price is more important, or whether if part of the city is more important for you and your kids, yeah? So that's the first part for inner cities. And then we look at something a bit further away. This is something that perhaps you're thinking of, 3 years is actually not a long time after my kids graduate. I just want to maybe use this property as their home and also your family home and retirement home. You might just, think further ahead and plan a bit longer. And then we'll probably look at a few options. In the north, we've got the Arcadia townhouses in Reservoir. In the northeast, there's Mill Park. And in the southeast, there's the Stud Park in Rowville. And if you look at all the properties, Reservoir is only 13 k's from the city. Mill Park is 18k. And Rowville is 27k. Have a look at the prices. For Mill Park, it's about 750. For Reservoir, it's about 6 to 80. And then for Rowville, it's 750. So you probably ask, Rowville, it's about almost 30 k's from CBD. Why is it so expensive? Southeast properties are usually a lot more expensive. And the northern side of the projects are a bit cheaper, a bit more affordable. Hence, there are a lot of projects and development up in the north. It's almost like a hidden gem. If you look at Reservoir, it's only 13 k's from the city. So Reservoir, it's about 5 minutes drive from Preston. And Preston properties, you're looking at about 1.2 to 1.5 for a townhouse easily. So this is where the market, I believe, will be heading. So keep your ears pricked up for all the northern suburb type properties. Yeah, at the moment, it's good value, but these prices won't stay like this for too long. So in terms of traveling time, you're looking at around 60 minutes. And I would say for these three properties, your kids would probably need a car. Even though transportation is quite convenient, to do that, you probably need a car to drive around. Yeah. So that's up to 60 minutes of travel. Now, let's have a look at Perth. What are we doing with Perth? Perth is very interesting. It's quite different from Melbourne. Perth is very much dictated by three things: what projects are available, the geography, and also transportation. Perth lifestyle has only kind of caught up to Melbourne in the last 5 to 8 years. So even with COVID lockdown, they were locked down for only 4 days. Whereas Melbourne, I've said this many, many times, we have been the longest lockdown city in the entire world. And Perth just charged through, plowed through, and business was as usual. So they've managed to get a lot of things done more than we do. At the moment, Melbourne is just playing catch up, but we will catch up to Perth. So Perth has been very busy. However, their development is a little bit slow in terms of how that compared to Melbourne. because it's only lately that there's a lot of people that's going to Perth. And when the international borders are open, everyone decided they want to go to Perth because Perth economy is thriving at the moment and people are moving to Perth. And because of that, there's also another housing crisis happening in Perth, with vacancy rate sitting at around 1.2%. General accepted norm is around 3% across the board for Australia. So around 1.2 is acute shortage. People are living in their cars, they are sleeping in caravan park. That's how bad it is for Perth. And that's why because of the lack of projects, it's a bit hard to be able to do a case study to compare projects. For example, southern suburb may not have 2 or 3 projects that you can compare with. So it really depends on what's available, when it's available, and then we can be able to do a bit more when it comes to availability. Geography. Perth is a very large state compared to Melbourne. It's very widespread. From north to south, it's huge. It's one of the biggest states in Australia. And sometimes in terms of housing, between each suburb, there's literally nothing in between. For Melbourne, because everything works around the Bay Area, so the housing area goes from the Bay to north, south, east, west. Whereas for Perth, in terms of geography, it's kind of quite sporadic in terms of the areas, yeah. And then transportation. Like it or not, you probably need a car in Western Australia. Whether you buy the car or thankfully these days there's a lot of those go get cars where you can rent them for a few hours. Although having public transportation close to where you live, it's actually a bonus. And trains and buses are still the most convenient. There's no trams in Perth, not that I know of. And hence buses are a very convenient way of transportation, and they're very safe and very comfortable. So that's that for Perth. And if you're looking for projects or apartment near universities at the moment, for example, UWA is University of Western Australia. It's one of the most prestigious university in Australia and also in Western Australia, of course. And the two closest projects available would be Subiaco or Crawley. Of course, there are also other projects, other properties around UWA, Netlands, Dalkeith, Peppermint Grove, and the likes. However, those are multi-million-dollar properties, especially Peppermint Grove. A house there is easily $5 million, and there are no apartments in Peppermint Grove. Netlands, once in a blue moon, you get a small project, but a 2-bedroom will set you up for about $1.5 million. And for Crawley, the 2-bed, 2-bath, 2-car park, 93 square meter, it's sitting at around 1.3 million at the moment. Compared to Subiaco, which is about 5K to UWA, you're looking at around 800,000, 2-bed, 2-bath, 1 car at 66 square meter. So that's for University of Western Australia. If you look at other universities like Curtin, ECU, and Murdoch University, the next available projects available in Curtin, near Curtin or Como, which is, if you take a bus, it's only 12 minutes bus ride from Como. This project, the 1-bedroom is 570,000, the 2-bedroom is 785,000, and completion date is around roughly 2025, 2026. So in terms of proximity to Curtin, this is a very good project in terms of closeness. Then if you're looking at ECU, which is Edith Carbon University, the main campus is actually in Joondalup. If you're thinking of buying in Joondalup, I would say get a house and land, because in Joondalup, being a house and land 4-bedroom, you'll be closest to ECU in Joondalup. However, if you want to be in the close proximity to ECU in CBD, which incidentally, these universities will complete its construction in late 2025. The uni is expecting about 265,000 foreign students coming in within 2 years of them opening. So that's going to be a lot of students coming in. And for the ECU CBD, hang on, I think I made a little bit of mistake here. There's a project in CBD, a 2-bedroom apartment. It's roughly sitting around 765, not 1.3 million. So excuse me. And also, if you are thinking of to be near Murdoch University, which is more like a south side of Perth, not South Perth, but more on the southern side of Perth, you should be looking at Cockburn Central. There is a new project that is going to be released around Cockburn Central, which is about 7 minutes to Murdoch University. And I did mention there's a lot of good investment opportunities as well in terms of house land in Western Australia. A lot of people do invest in house land. Townhouses, for some reason, it's not as popular as in Melbourne comparatively, mainly because Western Australia, the mentality, they still want a 4-bedroom house. So in terms of that, they have not caught up with Melbourne to live in townhouses. There are some. Building a townhouse in Perth is also very expensive, especially in the inner city. So having a look at house and land, there's a few good areas. If you're looking at North Coast, it'll be Joondalup, which I mentioned before, which is 28 kilometers to Perth. And then if you're looking at inland, northeast, I always love Swan Valley area. It's only 27 kilometers to Perth. It's about less than 30-minute drive, and the drive is beautiful. And between that Swan Valley area and Perth, there's nothing in between. It's just beautiful, empty land, and there's a nice township over in the Swan Valley area. Overlooking at the south, Hammond Park and Forestdale, which is closer to Murdoch University, you'll be looking at around 28 kilometers to Perth. And in relation to 27 to 28 kilometers, you'll be looking at the Lumpur going to say Jalan, Ara Damansara. That will give you a bit of in terms of distance relativity. And then, of course, a lot of people do love the south coast, which is Mandurah. Mandurah is similar to Geelong, or Victoria State equivalent, or equivalent to Malaysia, 70 k's. You'll be looking at, say, maybe KL to Seremban. So it's a nice, sleepy little coastal town, little holiday town, which is quite lovely. And there's a lot of employment opportunities also in Mandurah. And house land, a bit of warning. A lot of parents that I do speak to love house land because it's landed, of course, landed properties in terms of capital growth does give you a bit more. However, your plan may not coincide with your children's wish list because most of the kids would love to be closer to the city. Yeah, just be mindful of that. And also in terms of Victoria equivalent, those suburbs that I just mentioned or areas would be equivalent to Glen Waverley, Clayton South, and in the west, Caroline Springs. Now I'm going to hand you back to Jolene, who's going to wrap up the session for us. So over to you, Jolene.
Okay, so everyone, it has been already 1 hour and we're going to have to quickly get our special guest today on. But before that, just to recap what we have discussed today, the tips that we're sharing with you, 2 parts of things. If you're new in this space that you haven't gone into just the second part, start with the first, look into your goals, your motivations, and then, make your investment decision, whether or not this is something you want to do. And then if say yes, okay, let's make a wish list and see if it might work out or not. And once we go through with you and said, okay, it's workable, at this point, you may even have to, if you need stuff like financing, we may actually get you started here in stage 1. And then stage 2, it's the crucial part once you've made the investment decision. Item 1, number 2, and 2, this is something you have to start off first before looking at projects, yeah? Do that first. Set your time frame because knowing when you are investing, whether it's, okay, I'm ready now, I want to buy something between now and 6 months' time because my kids are already here or coming soon, that will help you to help us as well to say, okay, you need the property soon. So we find you something that's completed or about to complete. We don't even look at projects that are just launched. Yeah. So if you say, oh, our timing is different, we don't need the property now, or I can't really afford it now, I need time to come up with some money. Okay, we look at something that's completing like in 2 years' time. Yeah. So set your budget as well, because that will determine what projects you can or cannot buy. Right. And at the same time, like I say, if you need financing, this is the first thing you have to do. You have to speak to a mortgage broker immediately to know, because sometimes you may think you can only say, for example, you think you can only avoid $500,000 of house, but maybe you can actually afford more. That 50,000 or 100,000 more may open up more opportunities for you. Or maybe you think you can afford that much, but instead you can't, so you'll be wasting your time. So once we get item number 1 and 2 done, which we can easily cover that in 1 or 2 weeks' time, then we move into 3 and 4. Location, type of property, the interesting thing, that's the fun part of things that we just discussed with you about talking about distances, about, where do I buy my grocery from, where do I go get my coffee from, and stuff like that. And then after that, we do the most important of the last steps of this exercise, which is 5 and 6. We shortlist the property. So one we shortlist. I mean, if you already can pick one that you like, okay, we go with that. But if you said, okay, I can't decide, Jolene, between this one, A and B, or even C. So we sit down, we do the analysis with you and see which one actually tick most of your boxes and makes the most sense. Because sometimes we may analyze the investment potentials or the outgoings, or what does all the cost mean to you. So maybe initially you think A is good, but after going through, you say, okay, maybe C is better. So then we go through the process of buying that property. So all clear? All good? Okay. Now, I'll quickly get Michaela, who's our guest today, our special guest, Michaela Huang. Michaela, I think you can unmute yourself.
So yeah, hello everyone. My name is Michaela. I'm a mortgage broker. So thank you so much for joining this webinar today. Just to wrap up, I'm just gonna introduce a few products for non-resident expats over here in Australia for you. Won't be long. So I'll just share my screen here. Can you guys see my screen? Can you give me a thumb up? Yep. Okay, cool. Perfect. So I'm just going to walk you guys through finance for non-resident and expat. You may have a questions. What is non-resident and expat? So precisely speaking, if you're not an Australian citizen, or you're not a permanent resident, or even if you're a permanent resident, but you're not living and working in Australia, you will fit in this category. And then just a bit about myself. So I'm a mortgage broker, and I was an international student as well. I came to Melbourne in 2017, and I started in Monash University. And actually, while I was studying, I also helped my parents to buy 2 properties, one in Melbourne, one in Sydney, as like a foreign investor. So I was there. I understand this whole transaction from the start to the beginning. And then after graduation, I actually work in finance for 4 years. So I work in investment fund management, and also I work in major bank Macquarie for 4 years before I joined my current broker firm to become a mortgage broker. So because of my background and also the finance knowledge I've got previously, so now I specialize in helping non-residents, which is like international investors, international students, to do their finance to get a home loan in Australia. And you may have a questions like, who can actually apply for a mortgage in Australia? The short answer is everyone. So no matter you are an international student, you are just like an overseas investors, or you're holding a temporary visa right now in Australia, or you are an Australia PR already, but you are not living in Australia, you're living overseas, there will be a product that fits you. So as a role of a mortgage broker, my role is basically to quickly understand your background and your financial goals and needs. And I will be able to source and narrow down a few products in the market that will suit you. And I'll explain to you how this works. And the most important thing is I will help you to prepare your finance from the start, before you decide to buy anything, and until the end of the transaction. You mean after settlement, if you have any ongoing financial needs, I'm always here to help as well. And then the other part I want to cover is, why should I get a mortgage in Australia? because I understand that I got a lot of clients from Singapore, Malaysia. Like, look, to be honest, the interest rate in your home country might be lower than in Australia. But there are a few benefits that I would like to cover. So the first thing is, of course, better cash flow. Like, we all understand that, you know, even though, let's say I have $1 million cash, but I may not want to use all of them to purchase one property, because if I get a loan, I may be able to buy 2 or 3 properties instead of one. And then the second thing is NCCP, we call that. So basically what happened is, as you may know, Australia has one of the safest financial system in the world. So whenever you're applying for a home loan in Australia, you will be protected by the Australian law and regulations. So basically what does that mean is, whoever has been dealing with you to provide financial service, say for example myself, I'm a broker, or the lenders, the banks you've been working with, they are bound to protect your position as a consumer. So if, let's say, if you have any disputes during the process, or like if you feel like your interest was damaged during this whole process, or like you suffer from a financial damage because of the miscommunication or anything like that, you will be covered by insurance. So this is a really important part, because I understand that as an overseas investor, you may not understand, you know, the financial system or the law in Australia. So you'd be worried that what if I put myself in a bad position? But that's not true, because regardless of where you're from, as long as you get a consumer product, credit product, which is like a home loan in Australia, you will be protected. And then the third part is an interesting feature, which is called offset and redraw. You may not be familiar with that, but I'll just explain this to you in a very simple way. So let's say you have $500,000 equivalent to Australian dollars sitting in the bank, right? And instead of using the $500,000 to buy an apartment, you say, okay, I will just use $100,000 to pay for the deposit, and I will get $400,000 of loan. So as a consequence, now you can buy a property with just $100,000, and you will have $400,000 cash sitting in your bank account. So what you can do is, now you have a loan account, which means you owe the bank, the lender, $400,000. This is your mortgage balance, and you have $400,000 cash sitting in the savings account. So you can link them together as an offset, then you don't have to pay any interest for your home loan. These really, it's really good for those people who want to keep their cash in their pockets. And by doing so, you know, you get basically you get a loan, and you don't have to pay any interest while you're keeping the loan. And then the fourth part is potential tax benefit. This applies to, let's say, if you want to buy a property in Australia and you want to rent it out, because of the rental income you received. So there might be tax that you'll need to declare at the end of the financial year in Australia, because this is income generated in Australia. However, if you have a home loan against it, you can claim tax deductions on the interest you pay each year. So we won't go through the details here, but at the end of the day, I just want to highlight that even though you have the cash to buy this property in full, you may consider the benefit of getting a loan, especially when you can put your savings in an offset account to link with your home loan that can reduce the interest you pay every month. And then the second thing I want to cover is, as Jolene mentioned earlier, it's actually very important for you to understand what's your budget, what's your borrowing capacity, how much home loan you can afford even before you make the purchase decision. So usually we will just ask for 2 very simple documents. One is like a form, fact finder, for you to put in, let's say, your income, what's your current assets, and what's your liabilities. Liabilities means like your credit card, your current home loan, if you have any personal loans. You just need to put in the figure over there, and I will work out the calculation for you. And then the second thing is just like a home country credit report. Let's say if you're in Malaysia, you should be able to generate like a credit report online very easily. And then as long as you send through these 2 documents to me, I can work out a strategy for you, usually within 24 hours. And there's a short example here. Lynn is actually a client I dealt with earlier. So she is an international student and she graduated last year and she got a full-time job in Melbourne. So her parents is like, okay, I will give you some money for deposit, but can you get a loan so that you can buy an apartment to move in? So we apply for a loan of $440,000 for her at 80% LVR, which means 80% of the value of the property. And I got her an interest rate of 6.8%. So her monthly repayment is $2,869. So I'm not sure if you're familiar with the Australian rental market, but look, this is equivalent to the rent you have to pay if you want to just rent like a 1-bathroom, 1-study apartment in Australia. So in a simple way, which means Lynn's bought a property that she can move in rent-free, right? Just with $184,000 deposit. And the rest was covered by the loan we got her, and her monthly repayment is just $2,869. Okay, the last part is I'm pretty sure that you will have many more questions about these, but I'm not going to take everyone's time here today. So if you have any questions, feel free to reach out to Jolene and Kelvin. We can definitely book another appointment to go through that one by one, or I'm happy just to give you a call directly. But thank you so much for your time today, and I'll pass this over to Jolene. Thank you.
Michaela,
Yeah?
stay on the line for a little bit. I've got a question here, which I'm pretty sure the answer is yes. So there is an attendee who has asked, do mortgage offset facility, is it only applicable to all projects or certain projects? So I'm pretty sure it's to all, yeah?
Well, look, really depends on which product we get you. So in the market right now, there are a few lenders that we use, right? And usually they provide a mortgage product to, let's say, like overseas buyers. And usually if you're just simply buying an established product, which is like a usual loan, they usually come with an offset account. So you can use the offset account to offset the interest you pay every month. However, there is just one exception, is if you are borrowing the money to build a house. Let's say there's a construction loan. So there might be a short period of time frame, let's say during the construction period, you cannot get an offset account. But once the construction is done, you can revert the product to a regular product, and then that will come with an offset account. So to answer your question short, yes, most of the products will be covered by an offset account.
Thank you, Michaela. Well, I think we do have some clients who have expressed interest that they might want to get in touch with you. So we will do that after this. Probably in a day or two, we'll arrange that. Yeah. Thank you so much for joining us, Michaela.
No worries. Thank you.
Yeah. And okay, so everyone, I know we've run over time a little bit. So once again, thank you all for joining us today. I hope this has helped you. Please just give us a thumbs up if you think it has been helpful in any way or interesting. And we certainly hope that we have helped you gain a lot of some clarity on what you want to do. For some of you who has joined in late and you missed the front bit of the webinar, please ask us, or I think Phoebe, my colleague, will be sending out links to you. If you need it, just request from her. And do make appointment with us one-to-one. I strongly recommend that you book in an appointment with either one of us. And right now, I will get Phoebe to share the link of a form that you can fill in to request for an appointment, or you can, or just scan this QR code that's in front of you now. I'll give you a moment to do it. It's really important. It costs you nothing, probably a little bit of your time, like an hour or so, to see if we can help. Other than that, that's it for today, and hope to speak to you guys soon and have a good weekend. That's all.